Welcome to PyUncut, where we break down the biggest stories in tech, semiconductors, and the stock market in a way that actually makes sense. Today's story is about Intel, and a big question that investors are asking right now. Can Intel's new Core Ultra Series 3 launch actually push its stock higher? Because, let's be honest, Intel has been struggling for years. It lost leadership in chips to companies like AMD and Nvidia. It fell behind in manufacturing, and many investors started to see it as a company of the past, not the future. But now, Intel is trying to change that story. And at the center of this comeback attempt is one thing, the Core Ultra Series 3. So what exactly is this launch, and why does it matter so much? Let's break it down. Intel's Core Ultra Series 3 processors, also known as Panther Lake, are its latest generation of AI-focused chips designed for laptops and enterprise systems. These chips are built on Intel's most advanced manufacturing process yet, the 18A node. This is important because for years, Intel's biggest weakness was manufacturing. It was falling behind competitors like TSMC, which produces chips for Apple and Nvidia. Now, with 18A, Intel is trying to prove it can compete again, not just as a chip designer, but also as a manufacturer. And that's a big deal, because if Intel succeeds here, it doesn't just sell chips, it can also manufacture chips for other companies. Now let's talk about performance. These new processors promise up to 60% better multi-thread performance, faster gaming performance, and significantly improved battery life. But more importantly, they are built for AI. These chips include dedicated AI engines, called NPUs, designed to handle tasks like running AI models locally on your laptop. This is part of a much bigger trend, the rise of AI PCs. Instead of relying on the cloud, future devices will run AI directly on the device. That means faster performance, better privacy, and lower costs. And Intel wants to lead this shift. Now here's why investors are paying attention. The AI PC market is expected to grow rapidly, reaching around $25 billion by 2026. That's a huge opportunity. And Intel's Core Ultra Series 3 is positioned right at the center of it. In fact, these chips are expected to power over 200 different laptop designs from major global brands. That means wide adoption. And wide adoption means potential revenue growth. But here's where things get interesting. The market reaction has been mixed. On one hand, Intel's stock has seen some positive momentum after the launch, rising around 5% in some sessions. That suggests investors are optimistic. On the other hand, analysts are still cautious. Intel's earnings expectations have improved slightly, but the stock still carries a more negative rating from some analysts. So why the hesitation? Because this is not just about one product, it's about execution. Intel has made big promises before, but delivering on those promises has been a challenge. Now let's zoom out and understand the bigger picture. Intel is not just launching a new chip, it is trying to reinvent itself. The company is investing heavily in manufacturing, AI, and foundry services. It wants to compete not just with AMD, but also with Nvidia, and even with TSMC. That's a massive challenge, because these companies are not standing still. Nvidia dominates AI chips, AMD is strong in CPUs, and TSMC leads in manufacturing. So Intel is essentially trying to compete on all fronts at once. Now let's talk about the opportunity. If Intel succeeds, the upside could be huge. Think about it. A company that designs cutting-edge chips, manufactures them internally, and powers the next generation of AI devices. That's a powerful combination, and it could transform Intel's business model. But there are risks, big risks. First, competition. AMD and Apple are already strong in laptop chips, and Nvidia is expanding into CPUs. Second, execution. Intel's roadmap depends on hitting key milestones like the 18A and future 14A process nodes. If there are delays, the entire strategy could be impacted. Third, demand. The AI PC market is growing, but it's still early. Consumers and businesses need a reason to upgrade their devices. If adoption is slower than expected, growth could be limited. Now let's bring this back to the stock. Can this launch propel Intel's shares higher? The short answer is yes, but with conditions. If Intel can deliver strong performance, if AI PC adoption accelerates, and if the company executes its manufacturing roadmap, then this could mark the beginning of a turnaround. But if execution falters, or if competition outpaces Intel again, then the stock may struggle to sustain momentum. Now here's the key insight for investors. Intel is no longer a stable, predictable company. It's a turnaround story. And turnaround stories come with both opportunity and risk. Some investors see Intel as undervalued, with significant upside potential. Others see it as a company still trying to prove itself. And both views can be true at the same time. So what should you watch next? 3 things. First, adoption. Are major PC manufacturers actually shipping devices with Core Ultra Series 3? Second, performance. Do these chips deliver real-world improvements, not just benchmarks? And third, execution. Can Intel stay on track with its manufacturing roadmap? Because at the end of the day, this is not just about one product. It's about whether Intel can regain its place as a leader in the semiconductor industry. And that's a much bigger story. This is PyUncut, where we cut through the noise and bring you the story behind the numbers. If you found this useful, stay tuned, because the battle for the future of computing is just getting started, and Intel is right in the middle of it.